My name is John Jentz. I'm CEO of Latitude Uranium, and I'm happy to be here today to share with you some exciting developments at our company, describe a little bit more of our asset base, and explain what we see in terms of the investment thesis for our company. Uranium sector's hot these days, so we're excited to share the story with you. Diving right in terms of investment highlight, I think we've got the three things that most investors look for in a good investment. Right, I think we're in the right industry with the right assets with the right people, and on top of that, you get those three things and something that's undervalued. When you look at our asset base today, our market cap is roughly around the 45 million mark Canadian. We've got a historic resource on our Angilak property that's close to that. It's 43 million pounds. So we're trading around $1 a pound Canadian, call it 75 cents US plus or minus. And that excludes our CMB property, which is in Newfoundland. It assumes nothing for that, and so just on that basis, we're very undervalued. So you get these three things all in that with an undervalued thesis. In terms of uranium, I think everyone understands. Many people look at it many different ways. There's a supply-demand imbalance, of course there is. Everyone's trying to get to net zero and combating climate change. Interestingly, I think the thing that's really affected people recently, at least it has from the people that I know, is that for us, climate change was something that was happening. Some people believed it, some people didn't. That's fine. There's a wide spectrum of beliefs. I think what the recent things in the world that have happened, and people can visually see these are not made up by people. The fires, the drought, the flooding, the things that are impacting, the change in the ocean temperature that is affecting fishing patterns and spawning and harvests of fish for communities. No longer is this often some far distant land. This is in my backyard. It's in your backyard, and I think the thing that's really impacting everyone in the world is it's closer than people think. I mean, I think a lot of people thought that this was quite far off. Maybe it was your children's problem or someone else's problem. And I think what all of this is showing is that we all have to live in this world, and it needs to be addressed. And when you turn your attention to how it's going to be addressed, it creates a little bit of unease because the path is not clear. The path is not an easy one, but uranium is front and center. And so that's why, at least in my belief, I think there's at least a 5 to 10 year bull market in uranium, and we're correctly positioned right there. In terms of our assets, we'll get into a little bit more, but as I said, we've got two assets, both in Canada. Angilak is in Nunavut, and our CMB project stands for Central Mineral Belt. That's in Newfoundland, both in Canada. Everyone that knows Canada, always fairly highly ranked in a lot of these ratings. Permitting is fair, clear, and tested. And in terms of Angilak, it's already world-class in terms of its grade, 0.69 for those in uranium. Know that that's reasonably high grade. Not what they find the crazy stuff in the Athabasca, but this is fairly high grade for that, and it's a fairly easy ore body. We'll get into some of that. And it's got a historic resource of 43 million pounds. And at the CMB, we've got some historic resources as well, 14 million pounds, a little lower grade. We need to grow that if that's going to be a development project like Angilak is. And in terms of the people, we've got good management team, good technical, good board. We're all focused on increasing shareholder value, and it's a very collaborative environment, very small but nimble and capable team. So very excited there. So three things, all the three things. I think we've got the right industry, the right assets, the right people, and I'm arguing we're very undervalued. So investment opportunity right there. For those that like the numbers, some people like to see it visually, some people like to see it in numbers. This chart, for me at least, summarizes why there's increasing global unease about how we're going to exactly get to net zero or combating climate change. And let's be real, when we're talking about climate change, we're talking about getting carbon out of the air, both in manufacturing and transport. The three big buckets where global energy gets used: heating, transport, and the biggest one is electricity generation. And you can see the 7 inputs where our sources have come from. We're obviously trying to get rid of the top 3, or the number 1 through 3. They're not the top 3, but the 1 through 3: oil, coal, and gas. We all know that. They're all fossil fuels. And where does it have to go? That has to go into the bottom of 5, 6, and 7: nuclear, hydro, and other renewables. The issue with other renewables is wind and solar are the two big guys in there. They're good. But the issue is, in terms of getting baseload power for electricity generation, the technology is not quite there yet. And with hydro is great. It does it well. But you need a river and you need elevation and you need to build a dam. And so if you don't have that, if you're in the Midwest somewhere with flat land, that's not particularly an option for you. You can't get base load. You can augment it through wind and solar, but really all roads lead to nuclear, and nuclear is really only 10% of that today, and that's gotta grow, and it's only 4% on a total basis. So nuclear is squarely there. Hydro and the others will help, but any solution that's going to combat climate change and get to any type of net zero has got to go through that. It's got to go through nuclear. So again, that's why I think for me, there's a 5 to 10 year bull market coming from nuclear. Is the price going to spike? Everyone can see the spot price and the long-term contracting price. It's been inching up over time. Does it spike? Does it not? But where's it going? I mean, the trend over the next 5 to 10 years is up. Just a question of the slope of the line, really. When we look at our assets, again, Nunavut and Newfoundland, people can see there on the Canadian map. Over at Angilak in Nunavut, a fairly large package, about 685 square kilometers. Again, you can see the historical resource of 43 million pounds at 0.69, a fair decent size already. People believe in our focus there. We have an $8 million budget. We're solely focused to add to the resource. We want to increase that 43.3 million pounds. Again, we got world-class grade at 0.69. People still believe, and we do believe, that increasing that resource, if we can get that on its way to 100 million pounds, then we'll have world-class size combined with world-class grade, and that's a world-class uranium asset. So our $8 million budget this year, 5,500 meters of drilling. We'll show you we're sort of we've done about 3/4 of that already. We've done an airborne radiometric survey, which we'll touch on. And in the resource, interestingly, there's some byproducts, moly. People are fairly excited about these days, some copper and some silver as well. Turning over to the eastern side of the country of Canada, the CMB projects, again, Central Mineral Belt is what it stands for, an even larger package, 1,500 square kilometers. And those historical resources I quoted were at two properties called Michelin Lake and Anna Lake. And there we have a $4 million budget. Primarily, it's the airborne survey, which is about 3 of that. And we've got some geophysics at a property called Mustang Lake, trying to identify some targets. And one thing that the airborne survey is going to look at this year, which we're fairly excited about, is the team is convinced we're in IOCG territory. Iron oxide, copper, gold is what IOCG stands for. And when you do find these things, they're fairly large. A big example would be in Australia. Olympic Dam is an IOCG. And again, if we do find one of these, it'll be sort of a Hollywood problem. It's not really, these aren't small company assets. We'll have to figure out how to bring that one forward. But all to come. Turning over to our drilling, again, we've drilled 15 holes, 4,700 meters out of our 5,500, so we're about 80% done. We released these results on August 30th, and 3 big takeaways you can see from the map. Again, we'll get into it, but we have 4 different zones. This is only at our main zone. We have an east zone, a main zone, a west zone, and then a J4, even more to the west. And we'll look at those. This is all at the main zone. And the 3 big takeaways, the 3 big exciting results of this are, you can see in the green on the diagram, sort of in the middle, that little green blob. We think we found a potential new lens. We've got 3 holes there. 4, 6, and 8 are the numbers. And we think we've got continuity between those holes. And the team just has to get back, look at the data, update their structural understandings, and that for sure is going to be a focus of our 2024 drill program. And the counts per second there, everyone can look on the release, but they're up to 11,000 in all. It's some anomalous and decent widths as well. So we're very excited about that. And it's just south. You can see the scale there on the bottom. It's 200, it's just less than 200 meters from, or 100 meters from the eastern side of the main zone. The second important thing is on the west-hand side. You can see the black box there. We have 4 holes there, 11, 12, 14, and 15 are the numbers. And what these holes have shown is we've infilled on strike in terms of continuity and some down dip, just down to 300 meters. All the mineralization that we have everywhere is starts at surface and goes down 300 meters. We'll look at some deeper holes for next year, but that's where it is at this point. And everyone can see the results, the counts per second up to 21,000. So again, we're excited to get those assays back. And the third important thing is you can see on the eastern side, the eastern block, we've got 8 holes there. You can see the numbers, and those have been infill holes. There's continuity between the holes. We didn't publish cross sections. We will be publishing cross sections when we get the assay results back. But you can see the very interesting hole that we're very interested in, which is an infill hole. It's 100 meters between two holes. Is hole number 5, and these guns, we use the RS-230 if people are familiar with scintillometers, and it went off scale, and that's over 65,000 counts per second. So that's going to be something fairly interesting when we get the assays back. Again, the assays, we route them through Yellowknife. Obviously, the fires in Yellowknife currently are providing a very disruptive force to the town. It's been evacuated, and so our logistics routes, we're making changes, we're making do. Some of our results, or some of our core has shown up in Saskatchewan already. Some is pending, and so when we get a definitive time frame, we'll let people know, so people will have a sense of when they'll see some assay results from this. And the remaining 700 or 800 meters that we have left, again, the team's up there doing that right now, and we'll get that out as soon as they're done. We look at the corporate overview in terms of what the company looks like. A little over 200 million shares outstanding, some options and some warrants, all out of the money today. Our current stock price around 22 cents or so. Again, as I said before, market cap in Canadian dollars about 45 million, and we've got cash on hand of 4.4. Analyst coverage, Red Cloud, Dave Talbot, he's got a $1.35 target on us. In terms of board and management, over on the left you can see our board. Phil Williams, who's our exec chair. He's covered uranium as an analyst, as a research analyst, and he's the CEO of a company called Consolidated Uranium, great resource. Myself, Richard Patricio, he's CEO of Mega. He's been in uranium for over 20 years. Justin Reed, although CEO of Troilus, which is a gold company, he was the uranium analyst at a firm called Cormark in Toronto during the last boom. So a very good resource. And he used to actually work at Paladin as well. So he's a good industry resource for us. Bridget, in terms of audit, that's great. And our two Valor nominees that came on as part of the Angilak acquisition, Jim Paterson, who's chairman and CEO there. Again, he's got probably at least 15 years with the asset, so great historical knowledge. And Rob Carpenter, who came on and joined us, actually worked at the property in Nunavut 15 years ago in a firm called Kivalliq, where he actually worked the property. And some of the technical reports and studies that were done, he's actually one of the authors. So again, a great resource for both the company from an industry perspective and from an asset perspective. And over on the right-hand side, in terms of management technical team, Greg's our CFO. He's been in the mining industry for 20 years, so great resource, knows how to do flow-through and all that. Nancy is really our chief technical person. She's our VPX and QP. She has probably 15 years in uranium, as well as a few other metals, worked in Saskatchewan. She's actually worked at Kigavik, which is the deposit owned by Orano or Revo, just north of us in Nunavut. So she's worked in the area before as well. And then the rest of the team rounds out, and that team's based in St. John's, Newfoundland. So we'll look a little bit more at our Angilak project in Nunavut. You can see the picture on the right there of the territory. We're in the southern part of the territory, and the picture on the left is obviously in summer. That's fairly typical of the area. It's basically flat tundra, the occasional sort of undulating outcrop, but otherwise fairly flat. Bodies of water. Some are lakes, some are standing water, but that's in the summer. That probably looks like that probably 3 months of the year. Otherwise, it's fairly cold, and it's frozen and snowy probably for about good 6 months of the year. In terms of operating mines in the area, obviously Agnico is the big dog in the territory. Meliadine, Meadowbank, and Hope Bay, they have the 3 big mines. They operate those full year round. But if we're doing surface work like we are, basically you've got sort of a 5-6 month window between May and October where you can work fairly comfortably. You can extend it a little bit in the shoulder season, but that's basically the way it works. And we look at permitting in Nunavut. There's an entity called NTI, stands for Nunavut Tuktuk Inc. And smartly, what the territory did when they got their independence away from, they're part of the Northwest Territories in 1999. They became their own distinct territory, and what they did is, as well as into this NTI, it's a corporation like people think of corporations. It's professionally run. There are good managers. You send them an email, you get an email right back. They're very commercial. They're very economically oriented. The feds in Canada gave them some money to manage, and they've managed to, do quite a good job on all number of fronts. And so what they've done is they put all the subsurface mineral rights on Inuit-owned lands into NTI. So they're all centrally managed, all professionally done. And the deal that we have with NTI is the same deal that Agnico and the same deal that Baffinland have. It's all one standard agreement, spells out what we need to do, what they need to do, the economics. And so it's a good agreement to have. We have that in place today. It's not quite an impact benefits agreement, but it's a good start and a good framework. So we're very happy with that. We're going to talk about Kigavik. Kigavik is when we went back 2 slides, Kigavik, when you look here, when you look at our red star, just go north of that. It's called Kigavik, and it's got a U, and you can see there it's primarily owned by Orano. It's under, Orano is the new Areva. So when we go back here, they applied for a permit back in March of 15 for this deposit. It's a nice deposit. It's about 0.55 in terms of grades, about 127 or so million pounds. But there's a misconception in the market that we want to make sure that people are clear on. It's not that the territory is uranium. The NTI is definitely pro-uranium. You can go to the NTI website yourself. They have a policy framework both for mining and specifically for uranium, and it shows that it's pro-uranium. The big issue here at Kigavik was that in March of 2015, the metal price or the uranium price was between 35 and it was in the mid to high 30s. And Areva even said when they submitted the report that at the time, given the economics, it didn't work. But what they were asking for is they were asking for a permit with no start date, and they would get back to them when they would have the start date, which sounds a bit crazy, but that's what they did. And so obviously the board, you can see it in bold, the board said, well, we can't properly assess the environmental impact because we don't know what you're doing. We don't know when you're starting. We don't know what the dates are. We don't know how things are going to work. And so you can see on the bottom 2 quotes for some of the local people. I mean, it's a fairly reasonable response. Is that when these guys are serious, get them to come back to us. We're open for business. We're not going to sit there and just give you an indefinite start date. So I wanted to make sure that was clear for people. So it's not the territory is not opposed to uranium. They're quite pro-uranium. They're pro-mining. It's that Kigavik didn't give a start date, and that's why they didn't get the permit. But I'm sure they knew that when they submitted it that wouldn't fly. Okay, Angilak, the property, you can see it there. It's about 40 kilometers wide, about 20 kilometers high. It's not quite square, and you can see all the prospectivity around there in terms of the stars and everything going on. There's been not quite $100 million invested in the property since 1975. And again, the property is extremely prospective, but the existing resource of 43 million pounds, you can see it in those yellow squiggles in the top center. The resource has been the same since 2013. And so what our investors have told us is that, listen, this is world-class in terms of grade. Let's start growing the resource and getting it world-class in terms of size. So our focus, we have enough to focus this season and next season at a minimum just on the LAC 50 trend, let alone all the other potential prospectivity. So we haven't lost the sense of prospectivity and the regionality on the property. It's quite good. It's just in the short term we have to focus on growing the resource in those little yellow squiggles. Again, sort of a little close up, less busy. We want to sort of make it easier. The LAC 50 trend there, you can see it's in terms of its for the math people among us, A, B, and C, we want to sort of make it easy. It's about a 15-kilometer trend. The existing resource is sort of smack dab in the middle, again, with the yellow and red squiggly lines, and it's about 3 kilometers in height. But, that's a graphical representation, and you can see our camp on the far right or eastern side, the Nuktuk camp. That's where we have our home base. So the existing resources and the full LAC 50 trend are very close to camp, so it's quite convenient that way. You can see in the table of the historical resource, you can see the grade, you can see the moly and copper and silver grades as well. I think the interesting thing on this slide is the bottom long section. The warmer colors are better. You can see in the top right, you can see the grades. Red is over 1%, orange is between 0.8 and 0.1, so warmer colors are better. You can see a little bit of the grade distribution. Again, where we had the we've got the western extension on the left, the main zone, what we call the eastern extension, and then there's a bit of a gap, and then over on the right we've got the J4 upper and lower in the ray, and there's a bit of a 2-kilometer gap, and we'll get to that. All told, that starts at surface, goes down to about 350 meters, and that's about 5 kilometers long with about a 2-kilometer gap in there. And you might ask, what that gap is. We'll get to that. Our drilling that we referenced was just at the main zone, so you can see there the main zone. That's where the existing drilling was. In this 2-kilometer gap, again, we'll turn to this slide. This is what it is. In the foreground, you see the J4 and upper, which was the rightmost part of that long section. In the distance where that yellow star is the easternmost part of the eastern extension. And so that 2-kilometer gap goes from basically the end of the black line to the yellow dot. And obviously in the middle is a lake. It's not too deep of a lake. In summer when it's water, obviously you can't drill on it. You can do winter drilling. Winter drilling was not done historically. It just takes a little bit of planning. We got to get the camp up to speed. You do have to get a few permits. Those aren't controversial, but again, you just need the planning. You need the money in place to do that winter drilling. We're just assessing whether the camp, because the camp has not been prepped for winter conditions or real winter conditions or operating in the winter. We need to look at that. I don't think we're going to get it in for next season, but that is our goal if we can. And if it's not next season, it'll be the season thereafter, because the lakes are important, an important aspect of infilling that 2-kilometer gap between the eastern extension and the J4. Over on the right, you can see on the bottom where it says drilling, you can see in the purple, that's our existing resource. WE is western extension, MZ is main zone, EE is eastern extension, and then you can see the J4 array, all those in purple on the bottom. Again, we were infilling at MZ, which is the main zone. We've still got stuff to do with the western and the eastern, but you can see some of these in orange at the bottom. There's a bunch of expansion targets. Some are on strike. On strike is things like Spark and Blaze, and then ML, and then a little bit offset are called Pulse and Hot. And how the mineralization has been found before, we're trying to make it as sort of pictorially easy as possible. We start off with what they call VLF-EM. That stands for very low frequency electromagnetics. That's basically gets flown by a plane. And because the territory is basically flat, you can get fairly close, so it's quite good resonance. What this survey does is it lights up the conductors where it believes the conductors are. We take that, but not all conductors are necessarily uranium bearing. We follow that up with uranium and soil work, particularly enzyme leach, geochemistry. You have to do those samples by hand. That's fine. And where the two intersect is where we find the mineralization. That's how it's been found before, and that's how the existing resource has been found, and these expansion targets have been found. So a fairly proven historical technique, which is quite good. Our radiometric survey. Our real main goal of doing this was in the previous to replace or at least reduce the geochemistry required in terms of taking soil samples. Because what we did with the radiometric survey, again, it was flown by a plane, and there was good correlation between the existing soil surveys we had and this and what it was telling us. You can see it's a little small, but the uranium counts, again, darker burgundy red color is what we're trending on. You can see the LAC 50 trend in sort of bright red going through there. And really what the survey has done is it's done two things. One, it's got good correlation with our existing soil survey. So our soil survey going forward will be cut down by 80 or 90%, which is terrific. It saves on money, it saves on time, makes everything more efficient. And the survey has actually highlighted a few new areas that when we're done at the LAC 50 trend, you can see just below that, there's a few big spots to follow up on. The team is following up on those now, but again, that's between drilling at the camp. And so when they have extra time on their hands, the more regional focus will be after we can demonstrate resource growth on LAC 50 trend again, which is those bright red lines. In terms of the geologist among us, what Angilak really is, they call it a Beaver Lodge type uranium deposit. And these type of deposits, you can see a picture on the right. There's a bunch of mines in early Saskatchewan before the Athabasca Basin was discovered in the 50s and 60s. The Beaver Lodge type mines, Ace Deposit, El Dorado. There's an actual mine called Beaver Lodge. Contact Lake, and Gunner were all in Saskatchewan's formative years in the uranium industry. And basically what these are high-grade, narrow vein, and fractured host rock deposits. And they're fairly, so there's a geological analogy in Beaver Lodge. Again, for the geologists among us, in terms of what the key characteristics look like, it's really, again, it's high grade, narrow veins with fractured host rock. Lac 50 is a little bit different. Typically on Beaver Lodge, the grades range from 0.1 to 0.5. We're at 0.69, so we're fairly high up there. And there's also association with base metals, which we have in terms of moly, copper, and silver. So that's what we're looking at in terms of geology. What we're trying to highlight here is that, as we move this asset forward in a development scenario, grade is important, no question, but also being able to mine it with conventional techniques. And so what goes into things like that are the ore body orientation, it's structurally controlled, mining method, metallurgy. Again, we're starting at surface, we're down 300 meters. This is fairly as simple as, high grade, narrow vein structure in hard rock that's structurally controlled, going to be fairly straightforward to mine. When we do produce a PEA, we don't have one yet, but when we do, it's going to look and feel just like any other. Everyone's going to be able to look at it and understand it. It's going to be fairly straightforward. Where you juxtapose that versus the Athabasca, where the Athabasca has fabulous grades, but the mining is quite difficult, quite complex. And it's not terribly well understood by many, but we're fairly straightforward, fairly easy. So that's going to all add to the economics when we get there. And one very interesting thing that we're going to be following up on, there's a company called Tomra. They do these sorting solutions. So what happens here is the rock comes through on a conveyor belt, like you can see in the top right. It goes into a machine like on the bottom right, on the left-hand side, goes on a conveyor belt. There's a little scintillometer on there, and the scintillometer is trying to pick out from the conveyor belt what it thinks is waste and what it thinks is ore. And then it puts the waste in one bucket, puts the ore in the other bucket. And basically what the test had shown is that you can reject or get rid of 51%, almost 51% of waste, and you only lose 3% or 3.3% of the ore. You can get rid of half the rock and only lose 3% of the ore. If that's even remotely true, that's going to jack our economics considerably. And another part of the study even went further. You can get rid of 84% of the ore, and you only lose 84% of the waste, and you only lose 6% of the ore. Again, this is something that as we move forward on the development time frame, that we'll be very focused on and following up on. In terms of metallurgy, everything is fairly good for initial metallurgy. You can see the leach curve on the bottom left, over 95% recovery in 48 hours, which is very good. In fact, it's excellent. You can see the impurity table over on the right in terms of all the potential deleterious elements. Again, you can see what the results are. None of the impurity analysis is going to produce any penalties, so that's good. And what it basically presents is on the top left. It presents a 70% pure uranium yellow cake, and it kind of looks like that. They put them in drums, and you fly them out from our property. So that's what it would look like. So all the initial metallurgy good. We obviously have more work to do when we sort of get into more of a development time frame, but everything initially looks quite good. And lastly, on Angilak, in terms of, again, we're not there, but when we're moving down a development timeline, we've got some potential CO2 capture carbon credits in terms of the leaching process, which will refine. And really, the only reagents that are consumed during the leaching process are lime and sodium hydroxide. The rest are recycled. So hopefully that augurs well for cost and permitting, and having a green element to the processing eventually when we get there. So that is Angilak. We'll turn our attention now to the CMB project in Labrador. Again, stands for Central Mineral Belt. You can see in the top insert on the left, the purple squiggly in the black box. That's where we are in Labrador. You can see just north of us is other projects, and you can see there are projects about 125 kilometers in length. You can see there are existing resources at Morin Lake and Anna Lake, right there in the sort of the blue circles. And on the right-hand side, you can see the Michelin project, which is a big uranium deposit. It's owned by Paladin. It's 127 million pounds. It's just sort of slightly south of our Mustang Lake property. So they're in the territory. So this area is prolific for uranium. You can see those in the red dots all over the place, and those green dots are copper occurrences. That's one of the reasons that our team is fairly excited to see what this ground survey turns out in terms of the IOCG potential. This is sort of what the survey looks like. Again, we touched on the budget of $4 million. This is the big chunk of that $4 million budget. It's about $3 million. It's a big property. You can see it on the left-hand side there in yellow. You can about almost 32,000 line kilometers. It's quite large. It's ongoing right now, but because of the size, we'll get that finished up in Q4 and interpreted in Q4, and we'll get the results out before year end. And again, just a few more things. This thing goes down many hundred meters. Gravity data is a must-have if you want to look at IOCG potential. And again, what we're looking for are both IOCGs, and we're looking for existing uranium occurrences, because you got to remember, in this part of the world, the terrain is very undulating. You can't cover it on sort of someone on an ATV with a GPS in their back pocket. That doesn't really work. It's all helicopter assisted. So we need to look at tools like this to help refine the exploration techniques. Again, a little bit more. What we've been doing before is Mercator is actually doing the survey, and all this data as well is going to go into what we call machine learning. It's a little bit of AI. And basically, again, what it does, because we can't send people out in ATV, we have to sort of turn to some of these techniques to help evaluate and focus our exploration efforts. Turning to Mustang Lake, you can see on the left-hand side, it's in purple. Again, Michelin is just right below it. On the right-hand side is the square of it. You can see the lake in the middle. It's obviously Mustang Lake. And you can see the lines and how they were drawn. And what we're looking for here is targets. This is on trend for Michelin, and so we're hopeful that the survey is going to light up some targets for potentially maybe drilling in 2024. Again, you can see the spacing. You can see all the lines. Abitibi is doing it, and again, the survey is actually done. Interpretation is underway, and we'll have those results out before the end of the year in Q4. All right, summarizing both properties, again, $12 million work program for this year, split $8 million between Angilak, $4 million for the CMB. And what we're trying to do from a strategic point at Angilak, we need to grow the known mineralization in the short term, and eventually, once we do that, in the medium term, we'll start demonstrating the district scale potential. And at the CMB, we have to evaluate and follow up the existing uranium targets. We have to look at the IOCG potential. And we have to refine some of our exploration techniques in terms of machine learning and AI. And what this translates into this year, again, 5,500 meters at Angilak drilling, ongoing. We're about 80% of the way done. The last little bit's just being completed as we speak. The airborne survey we've looked at, it's completed, and the results, we saw that in the slide. Mustang Lake, again, the flying part of it is done. We're looking at the interpretation right now, and we'll get that out for Q4. And again, at the CMB, over the whole property, our comprehensive airborne gravity survey, over 40,000 line kilometers. And again, what we're looking for, uranium and copper occurrences, and evaluating the IOCG potential. Again, and that's it. That's our company. So going back, again, the three basic things you get in an undervalued company, along with undervaluation: right people, right asset, and the right industry. We're excited about it all. We've got the right package, and I think it's a compelling investment opportunity. Thank you for your time.